Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. In 2018, when trade war started, Chinese currency got weaker by 12%. In 2025, when trade war started, Chinese currency appreciated by 5%. In today's presentation, we are going to discuss why Chinese currency got stronger in the calendar year 2025. Second, what we are going to learn from China's export strategy, and finally, outlook on dollar rupee pair. The first reason for appreciation of Chinese currency was increasing trade surplus. In the first 11 months, China total trade surplus was close to $1 trillion. Despite US tariff and despite export decreasing from US market from $41 billion per month to $23 billion per month, exports in China grew. Why? Because they have diversified to non-US markets like Europe, Australia, and Southeast Asia. Second reason for the appreciation was rising FDI. If you see the data, you'll be able to observe that month on month basis, China was able to attract FDI from the global market in the year 2025. From January to October, they have been able to get FDI flows close to $87.5 billion. Third reason was, apart from FDI, FII also invested in Chinese equity market to the tune of $50.6 billion, which was drastically up from $11.4 billion in 2024. Second important lesson is diversification is key, whether in life, business, or as an economy. China decided that it is going to increase its exporting country base, and exactly they have done over the period of time, and the result was positive trade surplus. Now, my favorite part, what we learned from Chinese story. We learned that a depreciating currency is not only tool to boost export. Scale, expertise, and technology edge is an important aspect to increase exports. Second important lesson is diversification is key, whether in life, business, or as an economy. China decided that it is going to increase its exporting country base, and exactly they have done over the period of time, and the result was positive trade surplus. Now the big question is, what is the outlook on Chinese currency? USDCNY or CNH have a strong support near 6.95 to 7 kind of a level. Historically, we have seen that Chinese central bank have intervened strongly at those level. We are expecting some kind of a bounce back in USDCNY and USDCNH from the current level. Now, how it is going to impact Indian importer? For that, let us analyze chart of CNY-INR. If you see the chart of CNY-INR, it is getting a resistance at a 13-year high level, which is currently at 12.80 to 12.95 kind of a level. So we will suggest any importer who is importing from China, they should not immediately hedge their import payables. They should wait for a lower level of 12.50 to 12.40 kind of a level by keeping a strict stop loss of 12.95. Now let us discuss outlook on rupee. Last week of the year, global markets are generally on the calmer note across all the asset classes. Whether the rupee will continue to trade in a narrow range between 89.50 to 90, or we may see some kind of surprises from RBI, that only time will tell. The last two surprises happened when they were least expected. First, on 21st November, when the entire market was expecting that 88.80 will be protected, RBI allowed rupee getting weaker, and within few minutes it went from 88.80 to 89.50 kind of levels. The second incidence was on 19 December when rupee became stronger from 90.15 to 89.27 in last 15 minutes of the trade. Both the incident taught a valuable lesson. The first was to be vigilant every time, both on breakout and breakdown. Second, the importance of hedging near-term position both for exporter and importer. Coming to the main point, as of now, we are expecting rupee to trade in a narrow range between 89.30 to 90.10 kind of a level with a biasness towards rupee appreciation. Exporter should increase their hedge ratio above 89.50 to take advantage of higher premiums. Importer should wait for a lower level of 89 to 89.20 to cover their imports. With this, let me end my today's presentation. जय हिंद, नमस्कार, फिर मिलेंगे नेक्स्ट वीक. थैंक यू.